And 72% of the time the market goes up. And the answer came to me. And that's when I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye. Welcome and thank you for joining me on my podcast. Really appreciate it. You know, yesterday there was a big panic in the market because, again, the deal between Iran and Trump was falling apart. So oil shot up yesterday to about $92.65, but today it's back down to $90.15. Yesterday yields went right up to 4.22, and then today it was at 4.63, and now it's down to the low today around 4.22 again. So what's happened is, and I said this morning to my members, I said, look, you just got to chill out a little bit here, because what happened yesterday with the higher yields and the higher oil prices won't stand. He's got so much pressure on him. Because think about it. The reason he stopped doing all the military action, because that's what drives oil up, that's what drives gasoline up, that's what drives food up. And food, of course, people see that every day. You can't get away from that one. So he's doing everything he can to make sure that he gets along with the Iranians, at least till after the midterm election, because he knows if he gets into a firefight with them, oil's going to go up to 112, 115, and it's over. And remember, if he loses these midterm elections, he will get impeached. The Democrats are definitely going to impeach him. We're going to go through that again. Can you imagine? And we're going to lose the Senate. He's going to lose the Senate. That's a killer, because he loses all the appointments to the Supreme Court, the federal benches, and so forth. Those appointments are important. So I told everyone today, even though yesterday everything started to go back up, I said, just chill out. It will reverse itself. And I even said, I think today the market will turn positive, because he has to do something. So behind the scenes, that's what's going on, and you're starting to see that the market did turn positive from negative. That was no surprise. But the one thing you got to remember is you got to watch the cyclical stocks. The cyclical stocks are so important, because the cyclical stocks, remember, are your industrial, your materials, your consumer discretionary, transports. They are the economy. It's the economy. That's what it is. And again, these cyclical stocks tell you everything, what's going on in the economy. It tells you where the economy growth is going to go to. Remember, the economy is made of four sectors. It'll tell you where it's going to go. And also, even before we get the jobs report or the GDP, it will always tell you. So following the cyclicals, the XLI, XLB, XLYX, or XLY, and IYT, these are the transports, the consumer discretionary, and the materials. So important to follow these. And because that's what's going to tell you what is going on. And most people don't follow them. But before I get into the stock market much more, I want you to hear a couple tapes that came from the jibber jabbers today. Go ahead.
Fundamentals aren't bad. The U.S. economy is doing okay.
According to Realtor.com, home foreclosures jumped 26% in the first 3 months of this year.
Unbelievable.
You know, this is not yet an economy that we think is at risk of recession.
This economy is very fragile. It's at risk. Recession odds are very high.
Oh, one guy's at least telling the truth. But again, you have to watch the cyclicals because that's where everything is. That's the whole economy, and that's where you can find out just how bad the economy is, okay? And as I said, it always will tell you what the consumer is about to do. Is he spending? Is he not spending? That's very important. And consumer delinquencies, and I've been watching the cyclicals, and they've been spot on because consumer delinquencies are going up everywhere. Credit cards, auto loans. Matter of fact, did you know that auto loans, the foreclosures on these automobiles, the delinquencies, so high, historic, there's no numbers for them. We've never seen in the United States delinquency this high on automobiles. Can you imagine that? That's how bad things are. And the credit cards, the auto loans, the personal loans, bankruptcies up 67% for small businesses. And when consumers get squeezed, the mortgage is the last thing they fall behind on. They let their car payment go first. And that's what we're seeing. Are you nuts? We are seeing delinquencies on car payment like we've never seen before. And so, and small businesses, which is the backbone of our labor market, okay, is the delinquencies are up 67%. So what does that tell you? Well, that's telling you the housing market is going to be in big trouble. In foreclosure filings, in just the 3 months for housing, up almost 30% in just 3 months. Now, the reason is the jobs. That's one of the main reasons. These are all, when you hear how great the jobs are, this economy's never been so strong, the jobs are incredibly strong, unbelievable jobs. They're all part-time, low-paying jobs. That's the problem. That's the problem. The other problem, just as we started to roll into it, people started to buy houses again, even though mortgages were up to 7%, they're buying right at the peak. But guess what else kicked in? At the same time, the forbearance, the payment pauses, the modification programs, all back during the pandemic, that all started to unfold. So it's the time you got the mortgage rates going up from 2.5%, 3% to 7%. At the same time, the pandemic foreclosures, the forbearance, all those payment pauses all canceled out. So that's the other thing that's a big problem. And people who bought at the top are so stretched. And they paid too much for these homes. Remember how there was no inventory? When you could get a loan for 2.5%, 3.5%, there was no inventory. So you could buy a house. Nobody could buy a house for, well, here in Florida, just a small house, a starter home, is $400,000 or more. But let's use $400,000. And people are stretched because they don't have good paying jobs. So when your mortgage rate goes up from 3 to 7%, that's tough. Because and these people can't refinance those homes because there's no equity in the homes because they bought right at the top. What are you, nuts? So they can't catch up once they fall behind. Now, as I said, this is all going into the stock market. Unfortunately, what we have is they're able to tell us the economy's terrific. We've never had an economy like this before. Everything is wonderful. Do you have the tape from Trump? So if you got that cut, you load it up.
We had the best economy in the history of our country in my first term, and we're blowing it out now. We're blowing it away now.
That's just not true. I wish he would stop doing that. He's a great president. Why does he have to do that? The numbers telling you, no, he's a salesman. But he's been a salesman his whole life. He can't get rid of that. He's got to tell the people the truth. Or he's going to he's going to lose his midterm elections, especially if he can't get oil back under $80. He's got to get oil back under, but he knows that, and that's why he keeps on extending agreements. He's hoping he can do that right up to the midterm elections. So how does this affect the market? Well, because of Trump's dealing with Iran is tied back to all this BS, how great the economy is, when it's not. Our deficits are killing us. It's not. But when he goes out, and you heard what he just said, he's trying to keep people pumped up. And why he's got this problem with Iran, why he's got oil prices up there. And you saw what happened yesterday. So the cyclical stocks is what you have to watch. Okay? That's the whole key right there. Now, and there's big consequences when you have higher oil and higher yields. So Trump, he's holding on to that nuke dust. He won't give up on that. And that may cost him the election, because if he holds on to that and there's not going to be a deal, oil is going to climb. We're going to be up to $100, $105 oil, and that's going to kill the midterm election. So Wednesday, we saw a preview when oil and yields surge. We saw what's going to happen. The cyclicals, the most important ones, industrials, materials, consumer discretionary, transports, are the economy. And the economy gave us a real early warning signal. Cyclicals identify where the economy growth is going next, and there's no growth. Cyclicals tell you what the consumer is about to do. And they're going into foreclosure. They're going into delinquencies. That's what cyclicals tell you. Remember, the economy has vital signs, just like a human has heart and so forth. The economy vital signs are oil, food, and yields. So again, these sectors, you got to follow them closely. We do that every day. Now, the airlines get hit first. They're the first cyclical get hit. They get smacked, and we did some shorting on those today. Did pretty well. The trucking companies, the railroads, the industrials, you got to learn how to sell short so you can short these. Stop listening to these people on Wall Street. What are you, nuts? You're not going to short? They scare you to death. You got to short. It's like buying a car with no reverse. Would you do that? You got to know how to short. Because remember, the airlines, the trucking, the railroads, the industrials, those are the economy. And when those start going down, if you're a trader, you guys know how to short them. That's where you're going to make. If you're just going to sit there and hope they're going to go back up, and as your stock's coming back, what does Wall Street tell you to do? What did the jibber jabbers tell you to do on CNBC and Fox? Cost average down, buy on the dip when you're going in a downtrend. And you're buying the wrong stocks, airlines, trucks, railroads, and industrials. Because they're always pushing those, because they're the economy. Now, the stocks that we have, remember, we only got 12 stocks that are driving this whole stock market. 12, that's it. So, again, you got to know how to, short trucking stocks. JBHT is an example of one. Railroads, UNP, industrials, Caterpillar. And until you learn how to short those, you have no protection in the stock market. None at all. So you got to learn how to do that. And it's not hard. Not hard at all. So again, today, when we were watching the market, and you can see what's going on, let me see if I can get the stocks that have been driving this whole stock market, right? Take a look at all the four big stocks. Those are the ones that are the chip making machines. Those are the ones right there. They're driving the whole stock market. 4 of the 12. If I can find them. Let me pull it up here, see if I can find them for you. Now, here's what's going on. You have, let me pick them out here. Here you go. These are the 4 that have been driving the market. ASML. Now, they're going back up today. CLAC, KLAC, they're going back up today. LRCX, AMAT. Those are the ones you got to stay with. You don't short those. Those are the ones because those are the 4 stocks where all the money is going from the institutions. They have $31 trillion. They're parking most of that money in those four stocks. Those four stocks. So you just got to identify, how do I get into those stocks? I don't want to be paying too much for them. When's my entry level? We'll show you how to do that. The next stocks, after those stocks, those are your main stocks right there. And again, and then you have, of course, all the infrastructure stocks, the AI infrastructure. Those are terrific stocks. You got just look. We'll help you. We'll help you with these stocks. This is where you got to be. Trump is going to continue to get oil down. Trump's going to continue to get yields down. And these are the stocks, again, that you want to be working. I mean, I don't know what else to tell you. People are, I mean, for example, take the, well, let's look at the, here we go. So take the chip stocks, for example. So you got most of all the chip stocks, okay, and like the machine makers, they all like low yields, okay. Then the other stocks that like low yields are, besides the chip stocks, you have the AI, here we are, I've been trying to find these, the AI mega cap stocks. Those are the ones, those are the Magnificent Seven, okay. Those are what they call mega cap stocks, okay? And those are the ones. Now you want the infrastructure stocks. Those are the important ones. That's where all the money's going to, okay? When you think of the infrastructure stocks, the AI infrastructure stocks, think of the plumbing in your house. That's what those stocks are. They're the plumbing and this whole AI craziness, okay? So MRVL, we're up about 35% on that. We've been in that since March and April. AVGO, MU. Now, they're all crazy prices. They've gone way up. But if you know what you're doing, you still can buy as they go higher, but you got to know how to protect yourself. Where to put stops in, where to take profits. But mostly, when they come back down, remember, stocks are forward-looking. You got to know what to look for the signs to say, okay, these 4 or 5 stocks are ready to turn and go down. You're going to be ahead of them by 2 to 4 weeks. And then by the time they turn around and come down, you're set up to short them. That's how you got to trade. So these big winners, the 4 big machine stocks, the AI infrastructure stocks, that's where all the money is. That's where all the money is. And then the cyclicals you got to watch, because that's our economy. So if you watch the 4 big machine making stocks for the chip machine makers, the AI infrastructure stocks, that's the plumbing and all the AI, and you watch your economy stocks, because those cyclicals are the economy. And there's only about 5, there's 4 of them. There's only 4. There's industrial, materials, consumer, and transport. Transport, when the market starts going down, get hit, start shorting those transports like we did today. The airlines are the first to get hit. The minute you have fuel going up and yields going up, right, and everything starts getting sold off, that's the group you want to go after. We'll show you how to do it. It's not hard. Stop listening to these people on Wall Street, on TV. I mean, just because they're on TV, what are you, nuts? Doesn't mean they know anything. They're not there to help you. They're to sell books and everything else. So I want to close with this. It doesn't matter if the market goes up or the market goes down if you know how to sell short. It doesn't matter if yields go up or yields go down, or oil's up or oil down. If you understand what you're supposed to do when the yields are up. What does that mean? Or when the yields are down, what does that mean? The biggest thing is people are not following the institutional money. The institutions leave a footprint in every stock they buy. Once we got whacked 54% in the stock market in 2008, and once people realized they got screwed by these financial newsletters, a $54 billion industry that collapsed after 2008 because people finally woke up and said these people are full of BS. It went from a 54 billion industry to 5 billion because they finally discovered they're full of crap. Then, that's when the Congress and the Federal Reserve got together and said, no more storytelling. They're hurting us, they're hurting everybody. Let the big boys fuel the stock market. Let's give them $18 trillion, print $18 trillion, and then let the people, the smart stock people, follow their footprint. Think of it this way here. So let's say they got a total of 31 trillion, and they have 11 pipelines, and those pipelines goes to the 11 sectors of the stock market. Before, you couldn't identify what stocks they were buying, but since 2008, that's changed. So now the money will go through that pipeline to housing stocks, or the tech stocks, or the healthcare stocks. You can tell where the money's going. You now know what they're buying because it goes through those pipelines. And then the beautiful thing is it shows up on your chart. It has a footprint starting right in the morning. You can tell which stocks they're buying, which stocks they aren't buying. We're here to help you. We've been here since 1998. So go to philsgang.com. We'll help you out. See you on the charts.
Are you nuts?